All right, morning guys and girls. Sorry for the late start. Let's get going. All right, Friday session, U.S. markets once again, absolute non-event. You can see the Nasdaq failed to make it to 5,000. You can see that the S&P is still above 2,100, but same sort of thing. I mean, the ranges are so small. I mean, once we got a less than a 10-point range again in the S&P. It's getting freaking boring out there. VIX is dropping down, almost down sub 13 on the VIX. It's just everything's really died out here. So we're still looking for a catalyst to really get things going. We did have some stuff overnight that could potentially be a bit of a starting point for that. But, I think right now we've just entered into a very quiet market. You know what they say about boring markets and quiet markets is that, they're some of the scariest, and because of the fact that they can keep moving that direction for a long time. So I think you have to really, really be careful out there. This drift up is, it can potentially can actually build into something quite spectacular. So we did have February, which I think was the best month since October of 2011. We're up 5% on U.S. equity markets. We didn't have great data numbers. GDP came out actually all right. I think the past revision was maybe a touch softer. We had Coca-Cola, which bounced after it announced a 16.7% stake in Monster Beverage. Oil actually made it up on the month. We had Chicago PMI numbers that were on the lower side. The jobless claims numbers on Thursday weren't legendary. So we're starting to see a little bit more mixed data, but I think that the market's obviously been able to shake it off. We're seeing the U.S. Treasury market continue to manage to hold on to this 2% level on the 10% Treasury yield, and I think that's really, really important for the time being. We're going to continue to watch that as a great barometer and leading indicator from where interest rate cycle is going to go from here and how soon it's going to happen. If we look at what happened overnight in Asia, well, we did have Shanghai that was actually down a touch. Funnily enough, they actually had better than expected PMI numbers. The HSBC number was at 50.7 versus 50.1, and I believe that the national number reported out of China was at 49.9 versus expectations of 49.7. So still, both of them have beat on expectations. The Chinese the nationally reported number actually still came in at contraction. You obviously maybe would have seen that they came out and cut benchmark lending rates by a quarter of a basis point over the weekend. So I think that's one of the reasons why Australia traded so well, once again closing at a 7-year high. And we just continue to see, the drift up in Asia and other markets around the world has been actually quite spectacular. There's been no big moves. I haven't seen a 1% move on any index there, it seems like, in 2 weeks. But we see these 1/4% or 1/3 of a percent or 1/2% moves on a daily basis, just like we're seeing today out of Australia, out of the Nikkei, and hitting multi-year highs and all-time highs the entire time that we're doing it. It's really quite spectacular. So the mining stocks traded a lot better there in Australia on the back of the fact that we did cut interest rates, I think, in China. And other than that, it's not a whole lot to really pay attention to out of Asia. We do have the yen that's beaten down the door here at 120 again, and I think quite sleepily it's starting to look like it can make a run through 120 again. All right, if we look this morning, we had Bidvest, which was out headline earnings per share at up 5.2% to 8.86. Expectation was for up 10.4%. That was consensus on Bloomberg. So that's let's see here. Revenue up 16.4% for the full year to 104. Full year expectations for up 10%. So that looks quite good. I think if you look at the first set of numbers, that's the half-year expectations, which you don't really get those half-year expectations normally on Bloomberg. So when you kind of try to back it out into a half-year, it doesn't match up that well like for like. So I think that anyway, it's kind of hard to read. If you look at Divi per share, it came in at 426. Expectation was for 405, which looks like a little bit of a beat. We also have Centem, which is coming out today, full year numbers. Guidance recently at 13.6 per share. Expectation before that was for 14.27. Then we've got revenue expected at 9.74, divvy expected at 468. So look out for that today around 2:30. Then we also just had Berkshire Hathaway, which I think crossed just a little while ago. Actually looks soft on the earnings per share. It came out at $2,412 per share. Expectation was for $2,702 per share. Market obviously, I don't know, we'll have to see how the market takes that later, but it doesn't look great. All right, in terms of market data today, we already talked about the Chinese numbers. We also have manufacturing PMI out of Japan, came out a touch better. We've got nationwide house prices in the UK. PMI across the entire globe happening today, here, Europe, US. Then we've also got unemployment rate and CPI numbers out of the Eurozone as well. All right, let's get into the maps. First thing we're going to look at this morning is the Aussie, and I wanted to show this simply for, we've talked about this already. I actually kind of think that to an extent it's broken out, but we're going to look at this as just a kind of a lateral resistance here. So we made a new all-time intraday high a couple of days ago. I think that we kind of broke out here, on the chart. Either way you look at it, we're consolidating just above some sort of technical breakout here, but just below new all-time highs. And you can see there that we've had about 5 sessions in a row. This will make the 6th session, depending on if we stay underneath it or not, of all-time highs. We would need to close above. Let's just have a look here. If I'm not mistaken, it is at 71.73 and. Yeah, 71.88 is the all-time closing high, which was all the way back in July of last year. We got really close a few sessions ago, but didn't manage it. If we close where we are right now, we would make a new all-time closing high. Either way, the fact that we're consolidating right above new all-time highs, and very quietly, it's kind of like the market's not interested, lulling us to sleep a little bit, starting to feel like we're getting ready to make a big move through this number. So just watch really closely. If we get above those levels on the close, we really need to close about 47,200 or north of that. That'll be a new all-time closing high. Obviously, we probably see a nice breakout to the upside from there if that happens. All right, next one we'll look at is Naspers, which has also been lulling us to sleep a little bit. We've talked about this several times. I just don't want to go away from it because I want people to be on the bus here when this, if it does happen. So you can see right here, we need to see a close above 1720. We haven't seen it. We never closed above 1720 Friday. We actually traded better than Tencent and traded over the water. We lagged it for a few days. Same sort of thing, starting to feel like, it's just trades a little bit, underperforms it a little bit every day, lulling us to sleep. We get above 1720. I'm absolutely convinced this thing's going to explode like a rocket. So just keep your eye on that one. If you look at BTI, let's back it out a little bit here. We're going to go to a 2-year chart, and you can see here that we've really broken above an incredibly important level here, and really with a nice inverse head and shoulder pattern here. You can see left shoulder, right shoulder, head here. So great setup. We've finally broken out here. I mean, we've touched the same level around 668 several times. We've topped out at those sort of levels. Getting a nice breakout here. Looks like we've got about $70 of upside on the breakout in BTI. Brand's starting to weaken out again. Market looks like it's about to break out to new all-time highs. Major, obviously, component. So just keep an eye on this one. I mean, I think this thing's got a nice move to the upside coming. We've had almost a year of consolidation around that level, so keep an eye on that. Right, Discovery. The only reason why I want to show this again, I know we looked at this on Friday, same sort of thing. This 120 level, it continues to cement its importance. Once again, we got way above it, which are like 121.50. So we had a nice breakout, which looked like we were getting ready to take off. And once again, it failed. I think that we're looking at about only about a $5 consolidation here. So I think that if we do get above 120, we're only probably going to go to 125 in a straight stripe before we maybe start to consolidate again. But just look out for that level. if we hold above 120 and we get a close above there, I think we're going higher. But it's cementing its importance. So just it's just more of a reason that it'll confirm that move if it does break. All right, and the last one we're going to look at this morning, we haven't looked at actually probably in quite a while. This one, it can be complicated to look at, but to me this chart's really, it's starting to look more definitive, and this thing's really is starting to look a little bit more like a bear flag. This is Impala's dropping out of what I think was support. I mean, you can look at this and say that this is where that we need to get below 70 because we haven't seen a close below 70, but that we've actually been drifting higher for several months in kind of some sort of consolidation. And when we didn't have any other real attempts at 70 except for the end of December, in middle of December. And so I think that this is the way to look at this chart. I think we have dropped support. I think if we get below 70, it's only confirmation. But I think that there's, if we do continue to fall here, I think we're probably going to move down closer to 60, 65, maybe low 60s on Impalas. That's it for today, guys. Good luck out there.